G'day folks, welcome back to Pete's Investing. It's the weekend of April the 7th, 2024 for gold, silver, Bitcoin and the US dollar. And they've actually, for gold, silver and Bitcoin have actually risen slightly since our last video. And the US dollar has taken a bit of a turn to the downside. And this is our heat map. So again, we're covering this middle table here today in this video. And gold and silver on the monthly, weekly and daily timeframes are bullish or long positioning. The Bitcoin is turned down daily in a short positioning after being long for the monthly and weekly period. Likewise, US dollar is also neutral currently. So first we'll look at gold, and I've got the monthly chart here and the 1 hour chart. So I'll go down to the daily chart in a minute, but first I just want to show you the divergence we had on the monthly chart. During that little period there between those lower highs and those higher highs on the price, the CCI 150 showed a bearish divergence and the price actually fell off. And we had a secondary bearish divergence there between those peaks on the CCI 150 versus those highs on the price chart, and then likewise the price fell off again. And more recently, we've got this current bearish divergence playing out at the moment. Now, so long as this period of the CCI remains below that point there, we're going to consider this a bearish divergence. You can see there are higher highs on the price, and we expect that to fall off. So if that starts falling off, we'll then give you an idea of where it may stop, possibly. Now, we generally pick the closest Fibonacci range. So, for example, back here between that period there, or that secondary period, we take it back to the previous low, which would be there, up until that high. And in this case, the minimum target level of a retrace would have been between the 23 and the 38% level of the Fibonacci range. You can see there it broke through it. In this case, it came just below the 50% level, almost as far as the 61% level, and that's where that major support was at 104.6, and bounced from there, and then it's now currently tracking above this bullish trend line. So if I go on to the daily chart next, give it a minute to populate, and on the daily chart, eventually, let me talk about the hourly chart first. So you can see here we've got a few bearish divergence happening on the 1 hour chart, and each of those have hit their targets. And we currently, since our last video, I've got this bearish divergence on the CCI 150 versus high highs on the price, and I've put that little rectangle there in terms of where the target will be. And that was drawn back to that previous Fibonacci level from that point to that high. So if I draw that again, from that low to that high, and that's where that 23 to 38% level is. So let me just delete that, clean it up a bit. Also, what I like to do is on the 1 hour chart, I look at this stochastic market forecast 1600 indicator. It's in the overbought territory. It's actually fell below that initially, then it has risen up about there again. So again, overbought, we may see a bit of weakening in the coming hours and days possibly. Now this is the daily chart, which has eventually come up for us. Again, we've also got another bearish divergence on the CCI 150 versus high highs on the price. That needs to go up there. So long as that point there is below that point, we're going to consider this a bearish divergence. So just be careful about going long too aggressively. We must always respect these divergences where they show up. Next, we look at silver on the daily and the 1 hour chart. Let's talk about the daily first. I won't go to the monthly, it takes a bit long, but pretty much the same sort of story shows. And here I've got these arrows which indicate where there's key support resistance. And you can see there it's actually broken above that key resistance at 25.78 and making a lot higher highs. And the CCI 150 is also broken up into that overbought territory. The stochastic market forecast indicator is still around a 75 level, so it hasn't actually gone into the overbought territory yet, so we've still got a bit of a way to go possibly. But again, just be careful of going long too aggressively. We do have you can see there that CCI is broken higher than that high there, so that is no longer a bearish divergence. However, on the 1 hour chart, you will notice, even though we've had a couple of bearish divergences here that have played out and hit their targets, we now have another level potentially. Now, I don't like to stretch it too much. You can see that low is still lower than that low. That high is still lower than that high. So it's theoretically a bearish divergence, but it's a bit of a gamble probably. But so I don't like to stretch it too far. But that's potentially a bit of a retrace to the downside as well. Notice on the stochastic market forecast is well in the overbought territory, and we do potentially have a bit of a retrace in the short term. So some ways to go possibly yet, but again, just be careful of those pullbacks. The US dollar's next on the daily. First off, you can see there it's currently hovering around this minor resistance at 10,462, making a bit of a retrace. The CCI 150 is actually in the moving average band, which is a neutral positioning on the daily. And you'll notice the ADX 25 is also bullish. So I'd wait for it to break above that moving average band, and that's how we measure the the monthly, weekly, and daily trends of the heat map that I showed you. So that's currently within that band, so it's neutral at the moment on the daily. On the stochastic market forecast indicator, it's still in the bullish area above the 50 level and making a bit of a slight move to the upside, but just be careful of any further pullback. On the 1 hour chart, we do have you can see there that was still pretty much a double top on the CCI 150, and the price actually fell down. So what I said on the previous chart, on the silver chart, remember that I told you there was a bit of a stretch, that can still happen. So as long as the CCI remains at least equal to the previous high, we're still going to consider that a potential down retrace to the downside. And that's what the US dollar's done. It's actually pulled back. And if we draw a Fibonacci on that level, theoretically, had we looked at that as an opportunity, go back to the previous low before that retrace, before that divergence started materializing, you can see there that was the 23.38% level. So that would have been a minimum target reached as well. In this case, it fell almost as far as the 50% level. So always respect those divergences. Now at the moment, there is no divergence. That CCI is moving in line with the price. You can see there higher lows and higher lows on the price, and that is lower highs between those points there as well. So no divergence at the moment. If I zoom out, you'll notice the stochastic market forecast is still just short of the overbought, and again making a bit of a pullback to the upside. So we may see further upside on the US dollar, considering that longer period time frame is showing a bit of a pull to the upside as well. Next, looking at Bitcoin, first off on the daily, you can see there it's hit this resistance at 73,660, and it's actually hovering now between that major resistance and that minor support at 6,800. And the CCI 150 is still trending down, so that's a weakening sign, so just be careful about going long. I'd like to see it break above this resistance to be more bullish. The ADX is also fresh breakout to the long side ever so slightly, but again, I wouldn't be basing a buy position on that. And the stochastic market forecast indicator down here is in the overbought territory. Although, as you know from previous examples, like in that case there, it can keep moving to the upside even though it's in the overbought territory. But just as a minor way to look at it, it's still very much a bullish scenario, even though it's hit this resistance on the daily. On the 1 hour chart, now we did have this bearish divergence versus those higher highs on the price. It came down, hit our target, and currently where the CCI is moving in line with the price. So no real divergence there. I don't like looking at these lows as a bearish divergence versus higher lows there. I like looking at the highs in terms of bearish and looking at higher lows for a bullish divergence. So just my opinion. Some people may differ from that, but that just proves to me, that just shows me that there is a bit more reliance on picking the bearish divergence from the highs and picking the bullish divergence from the lows. If I zoom out on the 1 hour chart, again, you can see it's broken down from the overbought, and it's currently just shy of the 90 level and approaching the 75 level. So we may possibly see a bit more of a retrace. However, there's no it's predominantly long positioning according to the medium monthly, weekly, and daily is currently in a short positioning. But the monthly, weekly is long positioning on the CCI 150 range. To support us more, go to the Patreon page for Pete's Investing, where we also do weekly scans of blue chip shares that are trending along on a longer and medium term timeframes. Feel free to support us there, and we'll see you in a future video.